Morning, everyone. I'm Polly. This is Patty.
Morning.
Hi, Patty.
Hi.
How are you?
Good. How are you?
I'm good. Good, thank you.
I'm getting towards the end of this little cold that I've had.
Oh, thank
It's
God.
really got me good this last
Kind of my
week,
fault,
but-
guys, because I came to work a bit
Sorry,
sick.
that was
Thanks, Patty.
nah, it's all good. But be careful if you are sick. Watch out for the people around you at work and don't make them sick.
Go further from the
Take
screen
the
because
afternoon.
Patty's a bit sick.
Yeah, well, luckily there's a screen between us all. Sorry about this. Hopefully you won't get the flu again, but yeah. Anyway, besides that, I'm good. I'm glad
Yeah,
it's nearly
beautiful
over.
day.
We're on the way out.
Mhm.
Yeah, beautiful day here in Sydney. Blue skies.
Very lucky.
Very lucky. So let's get the show on the road.
Yeah, this morning session is all about planning profitable jobs and reviewing your clients' profitability. So it's all about you making more profit, making those good business decisions, better business decisions, hopefully, and the importance of solid job plan and how it may affect your future job profitability.
Yeah, I think it'd be nice to kind of show you guys what we'd recommend doing. First of all, to shape a profitable job, but also then what's important to review those profitable jobs. And it's kind of like treating those jobs or your work as a cycle and looking at how you can constantly improve that.
Yep.
And just ensuring that when a job wraps up, you have those margins there to make sure that you guys aren't losing out. Generally, what is good practice that you can do to make sure that that's happening. Really. Yeah.
So this is just our advice, I guess. If you are doing it differently, I'm really interested. We are both really interested to know how you're planning those profitable jobs. How do you check on the job profitability? So yeah.
Totally. Tom, you're sick at a cafe though. Is that okay? I wonder if there are other people at the cafe, Tom. Is it a busy cafe? Are you inside? Are you outside? Is the air conditioning on? These are all questions that we should be asking.
Yeah. Be careful, Tom.
Be careful of other people. Maybe order a lemon ginger tea.
I heard turmeric is really good for you.
That's what I was doing last week when I was at home. I brewed a big pot of like turmeric. I also got some ground ginger in there too, and fresh ginger.
Nice.
And then the lemon honey block. It was so good.
And Armour Force.
Armour Force.
It's like work soap. Anyway, should we start the webinar before we talk about?
Yeah, well, let's dive into some housekeeping before we do.
Yeah, sounds good. If you guys have any questions, feel free to just ask them as we go. We will answer them at the end. And please just say hi, introduce yourself, say where you work, where you come from, and any ideas and suggestions that you've got, any comments. Just use this area to chat to us. It's good to have some engagement on the webinars as well. So not just Patty and I talking.
Yeah. Thanks, Tom, for jumping in already. Milky latte. Nice. But yeah, let us know who you are, where you're from, and yeah, pop those questions in there and we can come back to them at the end.
Yeah. Oh, by the way, at the end we're gonna show a little sneak peek of something that's coming. Yeah.
We've got some design work that we want to show you guys at the end as well. It kind of ties into what we're talking about today, planning profitable jobs. So definitely hang around until the end so you can keep your eyes peeled for that. That's some stuff that we got shared just yesterday, actually, from our design team. It's based around the job page, and we're interested in surfacing more figures around profitability there. So we'll show you what that looks like and what our kind of vision is, what we're interested in bringing there to help you guys run those profitable projects more.
Super exciting.
Just keeping it at the forefront of the mind. So yeah, hang around and you can check that out too. But let's jump in, Polly.
Yeah, let's do it.
I'm going to share this screen and maybe you can explain a bit, maybe just generally the structure of the webinar and kind of why we're going to start where we are going to start.
Yeah, awesome. So basically what I just told you like 15 minutes ago.
Yeah, if you guys can remember, I
can't. Anyway, we're going to start from the very beginning and chat about cost and sell rates and understanding where you can manage those cost rates in particular. And how do we calculate those rates? We will then move on to planning a job, and we will touch base on the importance of a really good job plan from the very beginning, the importance of adding those items and team members straight away to be able to then generated JCR that
Yeah.
we will touch base on as well, and to be able to see what your estimated profit margin is going to look like for that project. Then we will touch base on reviewing your job profitability as the project goes. So generating those JCR at different stages of the project, perhaps, and maybe showing you ways around JCR and how you can view and understand those overall job profitability items and expenses and how they are aligned with your estimated and actual profit margin.
Mm-hmm.
And lastly, we will chat to you about reporting on your client's profitability. So that's where you will be able to make those really good business decisions in the future. Perhaps, do you want to keep working on that client? Or maybe, you should say bye to that client and actually pick only the profitable ones.
Totally.
But it really depends on the report that you will generate for yourself. So we will touch base on the report that you can create and how you can do that as well.
Cool.
But that's pretty much it.
Yeah, so starting at the start there, when we're talking about profit, we're talking about margins and the difference essentially between our costs and our sell price.
Yeah.
And a really key component of that, I know we bang on about this every week, so if you have kind of showed up to the previous webinar and we've talked about this, I'm not sorry for repeating again because it's really useful information to know, but it is essential that you have got your teammates' cost and sell rates set up, especially the cost there though. So you come into your team here in the profile and settings area. And the reason for this is that when an hour is tracked in Streamtime, when people are logging their time, we are looking at the cost of that hour versus the sell price of that hour. And so if we open up Nate, for example, here, we can see that we've got a spot for a cost rate and a sell rate.
And the good thing is if you don't have it just yet, that's all right. You can still calculate them and add them if you don't have them at all. And this will populate all your actual jobs, existing jobs straight away if you don't have any cost rates set up at the moment. So you can quickly change that.
Totally. And again, just if you have heard it before, then that's great. If you've got your own ways of generating those cost rates, then that's great. But what we would recommend is essentially that cost rate. It's going to be a bit different for each team member. And the reason for that is because you're using the hourly rate as a basis. So each individual's hourly rate. So it's their salary broken down into what does it cost to have them in the office for an hour based on what they're paid. And then on top of that, you're going to have your overheads, which is going to be, how much does it cost to run the business currently, and then divide that figure by the number of team members in your team and allocate a slice of that to each of them to whack on top of their salary at the hourly rate. And then the final thing that you'll want to add on there is a little bit of profit as well, which acts as just a bit of a buffer, accounting for unexpected costs and essentially just giving you a bit of comfort room so that cost rate is showing higher than it truly is. And the reason we do that is so that if you're abiding by your cost rates in stream time and things are still looking good, then it means the bottom line in your bank account is going to be looking even better at the end of the day. And so giving yourself that kind of buffer there with a bit of profit in those cost rates too is a great idea. So
exactly.
You heard it there first. You've probably heard it before, but
you will hear it again.
You're going to hear it again, especially if you show up next week. But essentially, those cost rates are the basis of profitability and stream time. That's why they're so important. Cool.
Awesome. So let's jump into plan a new job. Shall we?
Plan a new job?
We jump into an existing?
Let's do both. Let's start planning a new job so you guys can see this process of how we can kind of look at our estimated profit margin whilst we're setting one up.
Yeah.
So I'm going to set one up here for Nike. It's going to be maybe it's an Apple Watch wristband, special wristband. So Apple Watch band for Nike. Someone say collab. Cool. And
let's add a couple of items in there.
Great. So we always start with our discover phase. So let's say it's going to be about 15 hours of this. And let's add some team members here. So Danielle and Polly, I'm going to put you on this
Sounds
one.
Good.
Cool.
I'd love to work for Nikes.
Great.
Cool. And maybe another item?
One more item?
Yep.
let's say there's going to be some concept development. That'll be about 30 hours. And let's say you guys are going to be working on this one again. Maybe we'll get Sarah in on this one too. And I'm actually going to divvy these hours up so that you've got 10 hours each here.
Yep. Awesome. So right now we're actually building that job plan before creating a quote. So this is just a job plan for this project. All you need is create those items, stages or phases of the project, add those team members in. It's important because if you don't add team members, you won't be able to see this item on a JCR that you can then generate before actually starting to work on the project. So you won't be able to see that estimated profit margin that we're going to talk to you about.
Exactly.
So adding a team member and adding planned time is very important.
It's really important. And one thing we'll look at when we do open up this JCR is the difference between these items where I've got hours planned at a team level, a team member level, sorry. So where each team member has time allocated versus the top here where we're using that item level hour planning, and it's acting more as a bucket. So we'll look at the difference between those two and explain the difference in calculations there. Now let's just add design here because we'll need to do some of that. Let's say 40 hours from the bucket. Perhaps in this instance, we don't know who's going to work on it, and that might factor into how we can see this in the JCR so that we can at least show that to you guys.
Good idea. And maybe an expense, right?
Yeah, let's add an expense too.
That you can then once the job progresses, you can still see how that expense relates to that profit margin, the actual profit margin.
So we'll actually have to get these wristbands made, and that's going to cost us a bit of money. So let's say a piece, they cost
500.
We'll get 500 done. Let's say maybe they cost about $12 a piece.
I was going to say 500 a piece.
Oh, $500.
That's fine. I don't know. It's expensive.
Maybe we'll get 500 done for this. It's a very limited run, and let's say we'll put a 15% markup on that. Cool. I'm going to save that expense on here. Great. And so we've got our bare bones job at the moment, and before sending this quote out, what we can do at this point in the game is actually create a JCR. And the JCR has been designed so that you can get some information out of it this early in a project. Obviously, if you're using that in more retrospective analysis, then you're going to be running it at the end of the project, but there's no reason you can't do both. And so I've just downloaded that one. And so
one thing as well, JCR will only produce those valuable insights if you're actually using stream time, using the job plan the way it talks to JCR, if that makes sense. So you need to, once again, create those items and add those team members in and plan time so we can then calculate your total estimated cost, total planned sale, or total estimated profit margin, for example. The total estimated cost, as Patty said, we take it from your items and expenses. So expenses is pretty self-explanatory. We take the cost rate of those expenses. With items, it's a bit more complicated, but you just have to understand how it's done and why is it important to add time and team in when planning a job. When you add a team member under an item with the time next to them and the rate next to them, obviously the team member's rate, we take the team member's rate and time plan, and then we calculate the cost rate for that item. If you do plan an item with the rate next to an item, not a team member, we look at the time planned and we look at individual's cost rate as an average, and then calculate that cost.
So it's the difference between the buckets there and the items. And we can see here in all of these instances, so we did open up another job there. That last JCR didn't want to show us the items for some reason. Perhaps because we actually hadn't tracked any time against them, which kind of makes sense. But we can see that the total of these items is showing us how much was planned, how much was estimated on that cost, and that's based on those average cost rates there of those different team members. So we can see that Danielle cost $90, Sarah cost $100, the average is going to be 95 there. And so the estimated cost is that 95 multiplied by 45, which is the planned hours. And what that's allowing us to do is then look at an estimated profit margin, which would be about 47%. And that's based on the total sellable amount of this particular item. And the other thing to keep in mind here is that with those differences, obviously, the more granular you can get that planning to a team member, if you are setting up those hours based on the team member, you are going to end up with not a more accurate projected profit margin, because at the end of the day, there's no way to say how accurate that is going to be, but it will be a bit more refined in terms of how delicately you're planning that project. So if you're planning hours at a team member level, you're going to get a more refined number as opposed to planning them at the item level.
Yeah, true.
However, that's not to say that's a better way to plan your job based on what sort of flexibility it actually permits. And if that's then flying you into a false sense of confidence in terms of what that profit margin is showing you, or that estimated profit margin figure is going to be showing you, then that's something to be wary of too.
Yeah, for sure.
Cool.
And then let's scroll up, Paddy. When you do generate that JCR, you can also see the total planned sell, which makes sense and is very self-explanatory, taken from the job plan, and estimated profit margin. The way how we calculate the estimated profit margin, we take the budget figure, budget minus the total estimated cost expressed as a percentage. So this is estimated figure. That's where you can look at when you're planning a job. But then you can always look back when the job progresses. You can compare that estimated profit margin with an actual profit margin and see how well you're tracking.
Exactly. And Monique's asked a great question there, which is it possible to see an estimated profit margin before the job is invoiced? The answer is absolutely it is. As Polly just said, it's based on that budget figure, which we're looking at as a bit of a figure of truth. And you could either add that budget in yourself. It's a free text field essentially at the start. So you could add that budget in yourself. However, once the quote's approved, that approved amount is going to become the budget for the project. And
Exactly.
so what, if you are kind of entering a budget in there at the start before you've even sent that quote, then using that estimated profit margin to keep coming back to it in this JCR from your job plan allows you to make tweaks and slight changes to that job plan to kind of get it to a point where you're seeing an estimated profit margin that looks good for you.
Exactly. So, I personally prefer adding a budget, estimated budget straight away before I even generate a quote. I just think of just a budget that you think you will get for the job before even generating a quote, so you can get a rough idea of your estimated profit margin straight away. Once you generate a quote, your budget will then be confirmed.
Exactly. And over here on the right-hand side, you are kind of able to see a bit of a breakdown. We're able to see what is the true profit margin of the job. And when we're looking at profit margin, obviously we're waiting for invoices to actually be generated on this job before we can give you any valuable information there. We don't consider anything to be true profit until there's money in the bank and an invoice tells us when there's money in the bank. The profit margin versus the budget is showing us, what is the comparison of that profit margin versus the figure that was initially budgeted. So if you have invoiced the full budget amount, then this should be similar, which is kind of what we're seeing here. But if it's not, then you'll be able to see those discrepancies. And then that estimated profit margin as well. It's what did we set out with at the start. Now, what else we can see in the job cost report that is useful is obviously, at the end of the job, retrospectively coming back here and looking at these estimated costs versus the current profit margin. Nothing's stopping you from dropping in and taking a look at this throughout the project, because it is giving you those profit margin figures at the item level, which we don't really bring into the job page.
Exactly.
So if you are really into getting those nitty-gritty details, the JCR is going to show you that, and the expenses as well. So obviously you've got that margin calculating what that estimated profit margin is looking like, and you can review these at any point as well throughout the project altogether.
Exactly. So our point is it's really important to have a good plan to start with and then generate that JCR to have a rough idea of how you're going to go for that project with the estimated figures. Then once this project progresses, you can keep generating those JCR. You can generate as many as you want, and see how your profit margin changes and how your job's tracking. And then, as Patty said, if you're a numbers person, you like those detailed overview of how your items and expenses are going in comparison to a profit margin. You can also view that on JCR. So it's just a good practice to have.
Certainly. Great. Well, there's one last thing we want to show you guys today. It'll only take a quick minute. Oh, sorry, second last thing we want to show you. But let's just take a look at reporting on some client profitability in Streamtime. We did run a webinar on this not too long ago, and we're going to use a report that we've got set up from that webinar, and I'll show you exactly how it's working just quickly. It's called Client Profitability. Now, there's a couple things happening here. First of all, we're looking at just the jobs that are completed and archived, and what that's telling us is that these jobs are finished. They're more likely to be fully invoiced as well. And so by taking out the paused and in play ones, it's removing any jobs from here that might have had a deposit invoice showing up, in which instances, they might not be fully invoiced, which just means that those profit margin figures won't be too skewed, which is good. The creation date doesn't really matter. This one's showing us from after the 30th of June last year. You can include that, you don't have to. But more so, what we're interested in looking at here are the columns that we've got turned on. So obviously I've got my archived jobs here. I'm sorting this list by company name so that we're seeing our companies together. We can have a quick scroll and look at how nice how profitable those companies are together. We can see our job names, the total cost of the jobs, the total sell price of the jobs, what was invoiced, the profit margin made there, and then the total profit at the end of the day. So again, a really clean report here, giving us some real quick stats that we can then see totaled along the bottom. And we have got this one sorted by client, but let's go one step further and look at
the company.
Just Nike.
Yeah, like I was actually going to say, if you do have 5 key clients that you're working with, for example, 5 was just a number I took from my head, you can have 5 different reports of their profitability, 5 separate reports if it makes things easier to view, I guess. But right now we are looking at only Nike as our client, and looks like it's a profitable client.
They look like they're a great client to have, and maybe they're a new client for us. We've only got these 2 jobs which are completely wrapped up. We've obviously got a couple more which are in play, one that we just created. We can't quite see here yet, but maybe they've asked us to start a new project, and we just want to do a quick review of how the last couple of projects went. So whipping together a quick report like this is really easy, and it's going to show us just those stats in a really clean and concise manner. And that's kind of just what we wanted to touch on there. But before we wrap up today, guys, we do want to show you a couple of screens that we've got here.
That's so exciting.
Just the one screen actually, but it's never before been seen by non-Streamtime people.
I hope you're excited as excited as I am, because this is just so good looking, and it's going to make your life so easy.
Holly's the hype woman. All aboard the hype train. Cool. Great. So what we can see here is an addition to what is currently your job page. So currently on your job page at the top of the screen, you've got that burn up chart along with some really great stats and figures about how your job is tracking. Now, what we can see here are a few more tabs. Timeline as well is there, by the way, guys. That's on our roadmap. And this one is called Profit.
Sorry, it's just so exciting.
No. I thought I was giving you an illusion to be like, what's happening here?
So in here, you can actually have a better understanding of how your job is going without generating a JCR, without looking into those numbers. We've done the calc math for you. So you could see straight away that we're giving you some quick insights of how much you've actually invoiced and what reminder of what your budget is. What else?
We're surfacing cash flow. This is really important in terms of it's really important because it's information that we have in Streamtime that we could do more to surface for you guys and help you run your business more efficiently, giving you these call outs and telling you how much has been invoiced so far, how much is actually due coming up, and how much is unbilled, or what's the difference?
Yep.
What is the balance between what's being invoiced and what was in your budget, and how is that looking? And obviously here as well, we've got that invoiced versus the budget from the quote.
Profit margin,
the estimated profit margin, which currently sits in the JCR. We're interested in bringing that figure into the jobs page here. And again, obviously this is just sitting at the top of our job. And this bottom one here, tracking profit margin, this is a really tricky one to kind of figure out. And we're crunching lots of numbers over here at Storytime. Sarah is the mastermind who's behind that. But that tracking profit margin also, along with, if we can, sharing like a degree of confidence around that figure to show you how much profit margin is currently being made on that project, is something we're interested in as well. So if we can do that, then that's great. And obviously then your projected revenue here, which is going to be showing us how much is sitting on invoices that you've created ahead of time. And this is like quite tightly linked as well to some work we're doing around the invoicing area and stream time, which we're trying to make more robust as well. And I think we shared a little bit about that, but essentially we want to make it easier to create many invoices or part invoices or installment invoices for projects up front. So if that's a way that you work, that's something we're really interested in, so that you've kind of got this almost like a roadmap, but a bit of a trajectory in terms of that income coming into your business, keeping an eye on cash flow over time, ahead of time, and just getting that in a really nice tight little summary at the top of your jobs page here. So
it's all you need to know really about the job, this page. I would say
totally.
But some exciting stuff coming. So I'm keen to know if you like it, if you have any suggestions, or maybe you work differently. It would be awesome to know. We're always happy to listen to you and the way you're currently working. So we want to improve your workflow. We don't want to obviously affect it badly. So we want to improve it.
We're just trying to add value where we can. And Tom's star-eyed reaction is a great indication. If you guys have any other feedback about this, thoughts, then please just drop them into the channel there and we can pass them on to the design team. Unfortunately, we can't promise or even give you a ballpark time frame of when to expect this, but it's these are designs that we've mocked up here and stuff that we're working on. Certainly stay tuned.
I think that's it, buddy.
That's it for today's. Thanks everybody.
Thanks everyone. Bye.
Have a great rest of the week, and
see you next
see
week.
you later.